Hi, Mark Whitaker with WebCityForex. I'm going to go ahead and set up a quick tutorial here showing you how I'm going to get in and out using the 10 SMA and the 50 SMA, just to give you an example of how you can use the moving averages. So the first thing we're going to do is put in a 10 smooth moving average on all time frames. Now the next thing we're going to do is put in a 50 smooth moving average, and we'll give it a different color. Alright, now we have a definite indicator here to check out to see what's happening. We're at the H1, so let's go ahead and look at the H4. We see crossover here. We see a sideways market going here where there's no real dip, and a following 50 SMA behind the 10 SMA. So we can clearly see that if we'd actually gotten in the market around this area where it crossed over and we looked at the next entry into the next candle, we would see that we have no area of loss here, and we could have gone all the way down to here and gotten out right here where it crossed the line again. That would be a little over 104 pips. So we would have made a profit of 104 pips on that trade, and we could have gotten back into the trade at that point again because this bar showed a doji here. We could have gotten back into here and traded an additional 200 plus pips, and we would have gotten out somewhere around here in the total of the trade. Between here and here, we would have gotten out here, we would have gotten out here. So we would have ended up having an accumulation of trades of around 171 pips. We would have went from here to the highest point here, which would have been crosshair here. We would have had a stop loss setting of approximately 185 pips. We probably wouldn't have set it that high. We probably would have maximized it at about 50 pips. So let's take a look to see where that was. So it was about halfway up this bar here. And notice we never did get taken out by any of the other candles. This would have been our starting point line, and this would have been the ending point of the first, and we could have gotten back in on this entry of this doji here, and we would have gotten back out probably somewhere where we were losing at least half of our income. So about there. So let's take a look at the profit margin between the setup, the starting point, and the finish line for this trade. Around 229 pips total. So thank you for watching, and that's the easiest way to set up get into a positive trade with a trending moving average 50 and a moving average, smooth moving average 10. And I did this on the 4-hour time frame, or you could have tried the 15-minute time frame, and you would have seen an acceleration in the market this way in going short position. Both indicators are going short. It seems to be getting a little bit wider here, so I probably would have gotten back into the trade off of a reversal of 2, 1, 2, and this would be my entry, and 1, 2, and I would have got in right here. So let's take a look at that. 1, 2, and I would have gotten in right here, and I would have gotten out right about here when it crossed over again. So I would have had a profit of approximately 49 pips. And then notice we have an acceleration going this way. I could have gotten back in on this one. It would have taken me out, so I wouldn't have gotten in there. If I had, I probably would have waited one more bar to see what was happening. And this is on the 15-minute time frame, so we don't have long to wait. So then I would have gotten in right here, and I would have gotten out again somewhere here. Notice this is an insider bar, another insider bar. I would have waited to see what was going on by taking myself out with a stop loss here, but I never got that high with this little tiny resistance here, kind of in a sideways market here, and it started accelerating downwards, so I would have stayed into the trade until I actually got down to here somewhere, because this one took a long out, and I probably would have lowered my stop loss to here, never got to it. So then I would have probably removed that stop loss and looked at the distance between here and here, and maybe have gotten out 50% into the market here. So let's just make an assumption that we would have gotten out at the end of this bar here again, because it was moving the wrong direction. Because notice we had a little bit of a slowing down here, and we would have known that if we had had the moving average of the 5 EMA because it took a sharp upturn, and we could have gotten out at the bottom of this, at the top of this bar, at the end of this bar, if this hadn't gone up any. So we could look at making a profit from here to here. We got back in from here, so we would have had an original profit of about 49 pips. And then we would have gotten back in here, and we would have gotten out right here, another 103 pips. So we would have had just a little over 150 pips for the trading situation. Thank you for watching WebCityForex, and we will have more videos for you later.